Hello, fellow Ghost Traders. It's time for the 6/30/2024 weekly market update. This is SD, and it looks like the S&P had a nice drop in towards the end of its session, as did the Nasdaq, as well as the Dow Jones. So Friday was a rough day, ending a bit of a difficult week for the markets. We're officially at the midpoint of 2024, and stocks have a lot to live up to if they're going to continue the 2024 trend they started in the first 6 months. So far, year to date, the Nasdaq and the S&P are hovering near record highs, somewhere in the 15 and 18% mark, as well as the Dow Jones for the year is up about 4%. The Nasdaq has been led primarily by Nvidia. But it's relaxed its upward trend in the last several sessions as concerns set in that AI-based stocks have exhausted themselves in the market. Additionally, the crypto giant Bitcoin has also discovered that June blues are real, and they continue to slide probably through June as a precursor to a rocky time ahead for the S&P. The Bitcoin giant is expected to finish the year strong, but July will probably be more downside before the recovery starts to happen. As far as Wall Street analysis of the next 6 months, there's no real consensus. Some see another 7% rise, while many have conservative estimates. They're very hesitant to see even a 1% rise continuing to finish out 2024. It's still too early to tell what's going to happen, but I think the next several weeks will probably be a very strong indicator of how the rest of the year is going to play out. In short, the second half of the year has a really high bar to meet, and many investors don't believe that the market will, with all the difficult and unknown news ahead, be up to the task. In fact, one prominent research firm, BCA, predicts U.S. stocks will drop more than 30% in the next 6 months as the country speeds towards a recession, election fears, and continued rising interest rates, or maybe continued high interest rates is a better way to put it. Business investments also see similar outcome with the remainder of the year. They see also a very high drop as we have decreased spending, rising unemployment, a curb in employment, and also curbs in income growth. As always, we trade what we see and we prepare for what we know. As traders, we trade tight in our 1 to 2 day increments, which is why we do shadow and huddle, and we make sure our portfolio is delta neutral. As always, a strong position is adopted during these unknown and difficult times. The market will be closed on 4th of July, so it's going to be a short week in the market. As such, we will not be doing shadow this week. We will be doing huddle Monday, Tuesday, Wednesday. We will not be doing shadow this week because of the 4th of July on Thursday. The monthly jobs report is also expected out on Friday. They anticipate there will be an additional 190,000 jobs added. That is the anticipation. As always, I suggest we take this information with a grain of salt, as real job numbers never seem to match government data, and it seems recently this good government data is revised downward over the next several months as they publish updates. So keep that in mind. In addition, a lesser impact, Wednesday will also have the release of the Federal Open Market Committee meeting minutes. There is some impact, but not as much as will be on Friday. There's other lesser reports that are out. Monday will be the S&P PMI Manufacturing final, the Construction Spending Report, the ISM Manufacturing Report. They're all due out. None of them are really expected to make a significant jolt in the markets. In addition to that, Tuesday, we'll have the May job openings report. Again, really minor affair. Wednesday, we have a slew of reports, the biggest one being the minutes from the FOMC. We have also, in addition to that, ADP employment survey, continuing jobless claims, initial claims, the May trade balance, PMI composite, S&P and PMI services final, the May durable orders report, factory orders report, ISM Services PMI, and as I said a couple times, the Reserve Committee minutes, which may have at least some precursor as to what they're thinking about regarding interest rates. Thursday is a holiday, and Friday is the job reports, which, as we said before, is going to have probably some impact on the market. So we're not going to be trading in shadow this week, although we will be doing huddle Monday, Tuesday, and Wednesday. So that's it for the weekly market update. A lot of interesting things going on in the market. This is going to be an interesting pivotal week, I believe. We'll see what the jobs report has coming out, and everyone have a wonderful 4th of July holiday. Keep your trades tight. Let's see how things go. We do have a lot of skepticism that the market is going to continue its upward movement in that second half of the year, where most are seeing it being quite conservative and playing sideways, where some see it significantly down between now and the end of the year. So take that under consideration as we do our trades, and let's have a productive and great week in the market. Everyone have a great weekend, and we'll see you out there trading.